Yo, welcome everybody. I'm your host, The Fat Stacks. Welcome to the Stack House. And today we have another financial video for you today. Today we're going to be talking about the stocks that I'm looking into as the downtrend continues due to the market volatility and elections. But before I go any further, if you don't mind hitting that like button, hit that thumbs up, hit that subscribe, you know what I mean? Help your boy out as, we try to make better and quality videos going forward with the financial news and what I'm doing per se when it comes to these stocks and everything else. So I appreciate everybody coming through. So without further ado, the stocks that I'm looking to get into, as you can see on the screen right now, the first one we're going to talk about is JP Morgan. So as you guys can see, I have JP Morgan pulled up on my TD Ameritrade account. This is one of the other financials that I have that I plan on looking into invest as the downturn continues. So JP Morgan is also one of the largest banks in the US, and the dividend pays quite nice. So, and also with the price target that is right now, definitely I'll be looking to invest more, buying more shares of JP Morgan. So JP Morgan has also been doing some changes as well, changing over their so-called wealth makeover. So as you can see, we're only going to look at, a few snippets of the news from JP Morgan, so like I said before, they're changing over there. As you can see here, JP Morgan Chase has grouped its brokerage branch-based advisors and digital investment platform into one unit, newly named JP Morgan Wealth Management. So pretty much they're just changing the name and changing a few things here and there. But as for the stock itself, JP Morgan is also trying to get into the Square and PayPal. They're trying to get into that where they have their own little payment system from what I've seen as well. So this week has been pretty rough on stocks. But when it comes to going into buying financials on a downturn in the long run, definitely JP Morgan is going to be worth investing into, especially if these numbers keep going down further. So that's just me. I'm a long-term investor, as I keep saying in these videos. I'm not a short-term or a swing trader or nothing like that. I'm looking at 5-10 years down the road and looking that far ahead and looking back what happened from the 2008 before the pandemic happened. You can see where we're going to look at the chart about, well, this only goes up to 3 years on the TD Ameritrade, but you can go on Yahoo Finance or something like that and look even further back from the trend from 2008 up until now, and JP Morgan has definitely grown. So the next one we are going to talk about, we're going to back up, is, let's put it right up right now so you guys can see, Citigroup. Citigroup is, I know a lot of people probably are wondering, well, why would I invest in Citigroup? Well, even though they had their stock price target cut, as I'm just putting that up here in one of the latest news, but I think Citigroup as well has a chance to recover in the long run. Like I said, I'm looking at 5 to 10 years. I want to invest in about 4 or 5 financial institutions. Like I said, my portfolio is going to be long, but split into various companies. And then once I get a basis set in my portfolio, then I'll probably invest more heavily into very targeted areas. So I'm pretty much going from like here, instead of going from a small and going that way, I'm going from a large portfolio. And then in due time, I'm not really going to shrink, but target certain ones. I want to have a very diverse portfolio as time goes along. And at the age that I am right now, I just want to make sure I have plenty of options out there. So, but Citigroup is going to be my next financial that I'm looking into as things downturn as well during this market volatility. One thing is for sure is, even though banks are taking a hit per se, in the long run, they're gonna make out in the long run, you know. So I am looking to, like I said, just with JP, just like JP Morgan, I am looking to get into Citigroup, and I'm just looking and waiting, just waiting for the time to invest some more, because I do have some shares in Citigroup already, so I'm looking to put more shares into Citigroup. So, but in the long run of things, I'm only going to invest so much in Citigroup and probably invest more of my time into JP Morgan. So, but also this is also another dividend stock that I have as well. So I don't see the dividend being hurt any shape, way, or form with Citigroup. So, why not invest and get a little return? The next one we're going to be looking at as well, believe it or not, this, give me a second, y'all. The next one is, as you see it, AT&T. And we're going to look at the news right here. And one thing about AT&T, and I'm going to give you guys a heads up, the next one I'm looking at is Verizon as well. When it comes to the communication giants, I know you have like Charter. I've seen Charter stock out there. It's way too high for my blood as of right now. But I'm trying to find some value stocks, trying to start on the lower end, build up, and then probably in the near future try to, attain some of those higher end stocks. I know you could probably get those fractional shares depending, but I like to own whole shares. That's just me. So, but I am looking to invest more into AT&T. Why? Because 5G is going to be a thing. Just like down in the near future, when it comes to development and the progress of new communication technology, the 5G is going to enhance a lot of things once it's more accessible to more people in more areas. So with the new changeover with the from 4G to 5G, and this especially now with people being more at home, people being more online, people are staying, like I said, more at home for work and school, homeschooling. There's going to be a lot of stress on the system and need for faster speeds so that people don't get bogged down. So that's the thing to think about the future. That's one thing for sure, that there are certain things that don't get affected as much when it comes to a unique situation that we're in right now with the pandemic. When it comes to technology and communications, there's always going to be new developments, new ways of doing things, and usually it doesn't really hit as hard compared to certain areas. But you could almost guarantee their communications and technology will find a way to enhance the workplace and home environments with something like this going on. That's why you see some of the technology stocks have been taking off like a rocket during this pandemic because of it. And once again, AT&T is a stock that I own for dividend shares. And even though AT&T has a lot of debt on its books, it still has a good way of turning around as long as they can lower their debt. And as you see right now, there's the news as I'm pulling up right now, little snippets I want to read. And one particular one I want to look at is this right here. Right here that I have highlighted. It says, when AT&T reported solid third quarter earnings last week, it boosted its free cash flow guidance to at least $26 billion for the year. That would put the dividend payout ratio, which in this case measures the percentage of free cash flow paid out in dividends, in the high 50s. The previous guidance for that metric was in the 60s. A lower payout ratio is preferable in part because it means that the company's free cash flow is less stretched. There's more financial flexibility. ExxonMobil's dividend, by contrast, exceeds free cash flow, forcing the company's use of other sources of asset. Okay. So pretty much, AT&T is finding its ways to try to lower its debt in the future. So let's hope if AT&T can deal with having DirecTV, or if they unload DirecTV, because that's the huge debt on their books from what I've seen. But as long as AT&T can pay out that dividend, which is a pretty nice dividend as of right now, I see why not invest in it in the long run. Like I said, 5G is going to be a heavy player. And if some of these communication companies, AT&T and Verizon, can pick up some contracts to do some contracts for some other companies with communications, why not in the long run? Because that's what we're looking at right now. We're looking at, in the future, what is the workplace is going to look like? What is the home going to be look like? And with the pandemic, it's shown that it's going to be heavy technology, heavy communication, because it might not revert too much far back as what people think. So you still might have some off people going to the office and this and that, but working from remote might be a permanent fixture, because it's going to save companies money when it comes to building space and other things, paying utilities and this and that for a building. So, all right, next stock symbol, I mentioned it earlier, we are going to talk about is Verizon. And one thing we're going to look at is, I have my notes right here with Verizon. And one thing I want to share with you guys when it comes to Verizon, because see, I even have it printed out on paper, what you guys can see there. So when it comes to Verizon, what I want to show you guys is the 5G home network is going to be available in certain states. And let me scroll that down. Is it on this one? That's not the right news one. Let me, where is it? Here we go. Let me find you guys the right one. Sorry about that. Here we go. This is what I wanted to show you. That right there. The 5G home internet is available in the following cities so far, as you can see there: Atlanta, Chicago, Dallas, Denver, Detroit, Houston, Indianapolis, Los Angeles, Minneapolis, Sacramento, San Jose, St. Paul. Now, as the company expands its 5G into areas, that's going to be very, very big when it comes to being able to have the flexibility of getting faster speeds out there. So with that being said, make sure that well, give me 1 second, y'all. Whoops. Make sure that you guys are looking out for that 5G in your area, because it's coming. It is coming. So, and you'll probably end up paying a little bit more for it on top of that. Because right now it says the 5G home internet is $50 per month for Verizon customers and $70 per month for non-Verizon customers. So a good way to save money is, for you want to save 20 bucks, become a Verizon customer and you save yourself 20 bucks. So, but it is one of the things that Verizon is starting to have a lot of package deals, and they're starting to try to implement and spread out their 5G. And in the long run, this is why I'm investing in Verizon, not only for their dividend, but long term as well. I don't believe AT&T and Verizon are going to go anywhere for quite a long time, in my opinion. And I believe they can hold their dividends. So those are the two communication companies that I'll be looking at as well, as well as JP Morgan, Citigroup, when it comes to this market volatility, so I can add to my position. Like I said, I'm doing certain things that's best fit for me in the long run. I know everybody has their opinion when it comes to analytics and numbers and yields. And like I said, I can look it up. I look at it on my TD Ameritrade, my Yahoo. I do have Stock Card. I do have various areas that I look at and, read what analysis say about each company. And then I come to a conclusion on myself where how much do I want to invest in. So with that being said, I also want to talk about the Fed. The Fed has also stepped in to ease terms of lending program. And that was one of the big news that I saw that was pretty interesting, that the Fed has, if I can find it here, if I can find it. But it was one of those. Oh, well, I mean, you guys can look it up yourselves. But from what I've read, the Fed is easing up terms for their lending program so that more money, so that businesses can borrow more money. And they have changed a few things when it came to borrowing. They've changed the numbers when it comes to where small businesses can borrow a certain amount. They've changed the amount. But the main thing is this, what's going on right now. There's going to be some serious volatility until, one, there's a vaccine that people can trust, two, the elections, and three, consumer confidence. Without, definitely right now, consumer confidence is low. And what I mainly look at is those employment numbers. The unemployment numbers are still high. And there's still an issue with housing and rent and people not being able to afford their mortgage and rent. That's the next thing after the 31st that I'm looking at very, very closely. Because if people don't have jobs, if the employment numbers are high and people can't pay their rent, there's going to be a lot of supply out there and a lot of empty space when it comes to those rental areas, those homes. People won't be able to afford their homes because they won't be able to have jobs. And a lot of people are looking forward to the so-called stimulus, but the stimulus is the stimulus is not even a band-aid, to be honest with you. It's not even a band-aid, because in the long run, what helps people through this is going to be able to have a job, keep a job, and sustain it in order to catch up on their bills. If people don't have a chance to have a sustainable income, meaning getting a job, then the economy is going to be on a real slow way back to the numbers where it used to be. So I don't see any quick way, and I'm not even looking at the stock market either. Even if the stock market is doing good, the point of it is people are still unemployed. People still are having issues paying rent, buying food, and everything else. If people cannot sustain themselves and sustain their families by having a stable income, it doesn't matter how good the stock market looks. It's not going to look good at all as a whole. So I appreciate everybody listening to the video today. Like I said, hit that thumbs up button, subscribe, leave a comment down below. I appreciate y'all coming through, checking out this video. Much love. This is your boy, The Stackhouse. This is your boy, The Fat Stacks. Welcome to the Stackhouse. This is what I meant to say. Be safe. Y'all have a good weekend. Let's hope we have a strong week next week.